Hey, what's going on, guys? It's your boy MC Fire coming at you again with another video. Basically, fireside, fireside trade chats, something like that, where we're just going to be basically talking about what we expect to see in the market, where we believe the market's going to go from here, and kind of give people a glimpse into possibly what they should do, but really more about getting back to the basics so you don't freak out, lose your shirt, and make a bad decision in the market. So let's kind of dive right in here. See if we can pull this up for you guys. Awesome. All right, so straight out the gate, if you guys notice, we've got some Qs basically pulled up, like QQQ. But what I really want to kind of focus on the Qs isn't really the big drop, the big stark red drop. That's not what I want to focus on. What I really want to focus on is when things are happening faster than what you expected, all you really need to do is go back to fundamentals to kind of get your bearings. Fundamentals for us is rotation or imbalance. Is it in a rotation or is it imbalance? Is it trending? Is it a strong trend? How do we look at this? Well, to find out a trend, we will go to the weekly chart. We start on the weekly chart because for us, higher time frames represent more prevalent trends, bigger moves, things of that nature. So, really for the Qs, if you notice, out the gate, been in a relatively high uptrend, very powerful, I should say, uptrend since kind of the beginning of the year. In January timeframe, the market just said, let's go, and really didn't kind of look back. For those of you who are dollar cost averaging, like myself and Q a year and a half ago, buying on the way down was kind of painful, but seeing this gives you a lot of hope, right? You see the market rally all the way from essentially the beginning of 2023, and now we're in 2024, and the market is continuing to move upwards. Now we did realize that the first quarter was probably going to be pretty strong. Second quarter is where you're going to see a lot of pullback. There's also some news, right? The Fed is very, very hawkish, saying that, hey, we might not cut rates. Now, we're going to show you that here. And hopefully I got all my slides pulled up for you guys. But we're going to pull it up here. Okay, let's see if we can pull that up for you guys really quick. And for those of you who don't know where to do market research, I'll basically show you the most basic, simplest way to do market research. Here we have Forex Factory. If you don't know it, where to get it, it's basically right here, www.forexfactory.com. This will pull up. Awesome. As you can see, forecast for Monday, forecast for Monday. Not a lot going on. That's good. That means we should see maybe a normal day. But if you notice, last week was anything but normal. If we scroll down here to that Friday, right? Not really much here, but the announcement here for FOMC for Wednesday, Thursday was kind of huge, right? The Fed basically, the Fed basically said that they are not looking to hike, or they're not looking really to cut rates. They believe that the market can sustain these high rates. People are still buying houses, people are still buying cars, and so because of that, there's no need to cut rates. Just keep them where they are, and people will adjust. All right. So what does that mean for the market? The market had priced in, believe it or not, that rate cut. So that's really kind of crucial. That didn't happen, but it's okay, right? We're still really, really optimistic. So Fed Chair Powell spoke on that Tuesday, and it didn't really get too bright from there. So if you want to know when these high volatility moments are, Look no further. Forex Factory, it got you covered. Also, if we're going to look at, take a peek at sector rotation, I got another one for you. One of kind of my favorites, and in looking at what sectors are necessarily performing strong, what sectors might be setting up for a big move, things of that nature, is this one. And I'll pull it up for you here. You have barcharts.com, and rewind it and definitely pull up the URL there. If you can't see it, I'll try to zoom in a little bit. Well, you can't really zoom in on the URL, but yeah, it's up there for you. And really what this site is doing is, what its job is to basically tell you, hey, which sector is actually moving, what sector is not moving. As you can see, healthcare and communications, it's kind of getting its butt kicked here. Really, the tech sector, the tech sector and communication services is actually kind of taking a big kind of nosedive. But you can kind of see what is moving in the upwards directions. So when you look at what's down here, while this is dropping, where should you be looking at buying? What sectors can you take a peek at looking at buying, right? So you've got the materials. Materials looks like, I believe that's materials right here, this purple. The way you know, I just deselect it if it disappears and it comes back. So financials, right? That purple line on the upswing is financials. You also have right here, this, I believe, utilities. Yep. So utilities and financials. Those could, while the rest of the market's selling off, where is the market rotating into? Where is the safety? Where are people looking to hedge their bets? And there it is. Utilities, financials. With high interest rates, people might see that there's a buying opportunity in financials. Okay, so that's where we're going to start our hunt. We're going to start our hunt in XLF. XLF, there's your financials, right? So XLF, as you can see, has been in a pretty strong uptrend, right? But while the market showed a little weakness, XLF, on the other hand, on the week, didn't do too bad, right? 1, 2, 3, 4, 5. So this day it peeled to the downside. But what's unique is, while the market showed way more weakness, and we'll show that here, QQQ, this day the market showed a lot of weakness. Not everyone's selling everything all the time. So I just showed you very quickly how to identify, hey, there might be some life being breathed into other sectors of the market, and you're on the pulse of that immediately, right? This actually queued up a very, very weak buy signal. And I say weak because this is in a relatively strong downtrend. Now, I consider a buy trigger on the weekly chart, not the daily. So let's say, for example, XLF breaks the week's high. This right here would be a buy trigger on the weekly chart, right? It breaks above high, it's above the 8-period moving average in a uptrend. This is a really strong uptrend with a nice pullback. That's my weekly trigger. That's how I defined a weekly trigger. You guys can define a buy trigger however you like, but that's how I define a buy trigger. As if you on a weekly chart, I'm looking to do an options play, like a debit spread. Okay. And because we found that, hey, where's danger at? So we'll go ahead and mark these levels up, and I'll show you kind of how to do that. Typically, when you mark up levels, you want to move from left to right. I have a indicator that I pulled. It was for free. If you're really interested, comment in the video below, and I will link that directly to you for you guys if you want to get that free indicator. So shout out to Raggy Horner who made that. But yeah, so you're gonna go from left to right, and I'm just gonna mark up a few here just so you guys can see it. it's not really that difficult. You can pretty much go on any video anywhere and see how to mark up a chart. Now, we're not here to just make pretty lines. We're here to be able to deduce what the market's going to do, to try to predict price action. And that's kind of what we want to do there. So as we got a few, let's mark up the lines up here for now, where price actually is. And we'll see, this isn't like a major rotational line. So I like to mark the minor rotations, like caution zones. So I'll mark it yellow because it is on a weekly chart. It might be a major rotational level, like peak high, peak high. I like to see those as rotational, but if it does retest certain zones, certain levels, I'll mark that as a, hey, it does tend to pause here, so just be mindful of that. But as it stands right now, cool, right? Now, the purpose of this video isn't just to kind of give you picks and plays. I want you guys to be able to have an understanding of what you believe the market will do, what its options are. And I'm gonna tell you like this. There's so many indicators, there's so many gurus and all this other stuff. I'm gonna tell you, with trading, I consider it in its simplest form, the market can do one of three things. You can go up, it can go down, or it can go sideways, right? You need to have a plan for all three. So let's take this XLF for example. In XLF, the play has the potential to go up, down, or sideways. Where is it potentially likely to stop if it goes down? Where is it potentially likely to stop if it goes up, or settle if it starts moving sideways, right? That's what these zones are kind of telling us a little bit. And we can kind of prove that, and I'll prove to you that kind of on the next chart. It's like this for almost every market, any chart you see. If you look at market theory, volume profile, or volume profile, I can basically like prove this out, right? That might be in a later video. I might get into it now, but we'll see. Let's say, for example, on the daily. On the daily, you'll see that our weekly levels are marked, right? And they show up really nicely on the daily. You got our two relatively peak highs. You've got the danger zone, and you've got this peak, right? And they kind of carry over too. I like to keep them and have them extend to the right. So what you'll notice here is there is a buy signal if it breaks high on the weekly here, but until it gets there, there's no buy signal. There's no reason to take that buy. Now, why would I look at this chart now and say, if I take the buy trigger here, that might not be a good thing? If you said because it's at the top of a rotational level, you would be right. You would be absolutely correct. Now I'm going to leave the alert there because if it breaks the rotational level, that becomes a new low, right? If it breaks that, that resistance level, right? That resistance high, if it breaks that. So immediately getting in doesn't necessarily mean, or immediately getting triggered on your invisible line on the chart doesn't necessarily make the play work out in your favor. You have to take into account what's going on. Does the numbers make sense, right? Now, what I've noticed typically in trading is this key factor. To illustrate my factor, I'll go to one of the recent trades we took in XLE, and I'll go on a weekly chart to show you and illustrate why we took this trade and why it's relatively basic to understand the market's going to do one of three things: up, down, or sideways. Now, as you see here, we have this is our 8-period moving average. This line right here crosses the 21-period moving average. And as it crosses, it gives you a golden cross. We have it in green. The lines are just to help you mentally clear up and make a decision quickly. They have no bearing on the price action. They actually have no bearing on really what's going on in the market other than people's imaginary understanding of it, right? What really drives the market is, volume profile. Understanding where fair value is and where businesses want to test new levels of value or look for more demand at lower prices. So this right here, if you notice, this is on a weekly chart. 8-period moving average is crossing up, so it's potentially setting up for an uptrend. potentially a buy trigger, right? This week broke this week's high. So that right there, already you're above the 8-period moving average. You're above the previous week's high. That's a buy trigger. So the next week, right, I see that. I don't get in a little premature. I want to wait a little bit. And I get in at here right at this green arrow with the stop out of previous week's low, right? I think I even left this here to kind of showcase where my stop, where I wanted to get heads up. Hey, like it's lower than this week's low. So something to keep in note. The objective was I got the option for a 3-week debit spread, a 3-week call debit spread, right? It did actually work out really well, really well in our favor, but that's not really the point of this video. Actually, we cut it off early, not because we didn't want to leave a runner and let it run. We like to stay in uptrends, especially powerful ones like this, for as long as possible. But we were switching platforms, so we did cut it short at here. But trust me, we wanted to roll it out. And if you don't know what rolling out or up is, don't worry about it. Something we can look up or even get into in a later video. What I really did want to key you in on is price really only has 3 things that it can do. Really only 3. And in looking at that, you can break that down here, right? So as we bought this day here, right? Price has only 3 things it can do. It can come back down, test levels, settle in the median, or test higher levels. Those are the only 3 things it likes to do with these levels. Typically, it likes to settle in a value area or VWAP, unless it's going imbalanced, right? Unless there's strong buying demand, buyers hitting the ass, really pushing. They're paying up on the bid and ask spread, right? So if they're paying up, then yes, the market will go in balance because sellers can get out of the way. In this case here, right, halfway point, buyers, they can only do one of 3 things. So we can zoom in here to kind of showcase that. Over here, we got in. You can do one of 3 things, right? You can go up, which it does, comes back down, test lows, goes back up, high. So what do we call that? That term is called rotation. That aspect of going up and down, up and down, up and down, that's rotation, right? So the market basically rotates for 5 days. So basically a whole week of nothing but rotation. And sitting through that is agonizing. But one thing I want you to notice is here it tested highs, here it tested lows, highs, lows. Now, something happened over the next 3 days. Sat in the middle, normal, tested highs, right? Low, middle, right? From there, something very, very important happens. You're expecting it to test high, middle, low, middle, high, right? But here it tested middle and then it went back high. And at this, At this point, as this day happens, you just broke in the previous day's high and you're out of rotation. So the market is prime to go what? It went from rotation, right? It's primed to go imbalance. That's what you like to see. That moment when the market goes from rotational to imbalance is very, very powerful for trending moves. Very, very powerful for trending moves. That's what we like. Option players like to see. Okay. We got in early because of our weekly trigger. But if you saw this and you saw, hey, the market likes to do one of 3 things, go up, middle, or down, then this is good. In its rotation, it went high, low, high, middle, high, started, actually broke above high. Very powerful potential to trade upwards. Go imbalance. We're looking for the market to go imbalance, go to the upside, right? In this case, it does do that. We take some off the table here. We actually sell like 50% at this point. I didn't know that I wanted to switch platforms, but the plan actually originally wouldn't have been get out until it hits rotation, right? Till it completes a rotational sector. So it actually goes up to the high, right? We get some more off the table. Then from there on a daily, we're looking at it and it's like, hey, it is at 3 ATR. Let's start setting up for runners. Let's start rolling. Let's start rolling it for potential runners, right? So if we go back to the weekly chart, it all happened in 1 week. We took half, took some more, set up for runners, and we actually closed the trade, left a lot of money on the table. Shout out to us for switching platforms. But we understood, hey, leaving a runner on the table and letting the market take you out is better than you getting out, just taking your profits, right? You already are in the trade. And because of the runner, it's only one contract, maybe two contracts out of 8 or 9 contracts. So because of that, you've pretty much made your money. Like you did extremely well. But the point that I really want to make here is the market can only do two things, or three things, excuse me. I'll show you that in another example here, GLD. We'll go weekly. And GLD has had a monster of a run, absolutely massive run. As you notice, we have our rotational levels, we have a hazard level. This is again the weekly chart. And if you're looking at gold, major buy trigger, right, really kind of right here. But this is kind of what I want to key in on. Isn't really the trigger. It's more of what we can gain from this. And if you ever see this, again, definitely something to think about. I need you guys to pick up on this because this is huge. Okay. Now, as you can see here, and between here and here, even the auto level system kind of picks up this rotation. It breaks into this zone, breaks below this low, right? Starts rotating, right? Rotating down, rotating up, rotating down, rotating up. Now you get a break to the upside. Boom. Where does it stop? At kind of this rotational zone. But what you notice is, remember, it can only do one of three things: up, down, or sideways. It can go up to the high, go down to the low, or pause in the middle. Here we have a what? Breakdown, pause in the middle. Now, after the pause in the middle, you got to think, if market orders are being printed at that level on a high of a rotation, what the market is really saying is, I'm comfortable with people executing prices above typically what is fair value. These rotational levels are kind of the extremes of the market profile. So because they're the extremes of the market profile, you rotating to the middle just means I've tested fair value. People, demand is still there. They're itching to get in, and they're going to push prices higher so that they can break the high and go imbalanced, trend upwards essentially. And it does exactly that. It rockets up until it hits like this, imaginary trend line. But sometimes trend lines are good to see, for me, to see kind of what the market finds as fair, right? Or where they try to give value to fair, right? What is overextended, what people are willing to pay, long-term sentiment, so to speak. So let's go back. Came in, rotation. You saw a break of that rotation, test of the middle, break of that, go imbalanced, right? The rest is history. It even, for a second here, goes, and I'll mark this on the chart so everyone can see, because you might not be able to see my little mover cursor here. This kind of would be one of those hazard zones that I'm talking about on the weekly, right? Yellow, boom. Is where it kind of does like a brief double tap, like this is clearly a sign of resistance, right? But even here, it comes up here, it settles in the middle here, kind of rotating up and down at this area. But as it approaches here, remember it opens here, approaches this high. Because of that, I'm looking at, hey, if you break high, you're going to continue in your imbalance, your trend, right? I'm looking for that rotation and then imbalance break. Now here, same thing. We can count it out. Rotation, starts printing market orders up here, breaks, runs to the upside. The next level of resistance is here. It can do one of two things, or one of three things. It can go down, go up, or pause in the middle. Those are the only three things something it can do. The only three things it wants to do. Find a fair value in the middle, test a high, or test a low. Okay. So if it's at a line right here, what is the next two things that you could expect? It to test the middle here or to test the middle here. That's exactly what it does. Comes down, test the middle here. Spins a week. It comes down to the middle, spends a week out here in the middle. Hanging out here just in the middle. Now that it's the middle, what are the two things it can do? It can test the high or test the low. The test of the low. Now that we're at the low, what are the two things it can do? Test the middle or test the middle here or test the middle here. Those are the only two things it can do. It's not going to stay on the line, and it's probably not going to stay in the middle because it's on the line. One week of moving up, so I would assume, right, you're in an uptrend and you have a buy trigger, kind of a strong buy trigger actually. Break above the 8, break above previous week's high. This is a buy trigger at the top of the range, and boom, it absolutely explodes. It's a very, very beautiful, very, very beautiful buy trigger, right? I wouldn't take the sell trigger because right now we're in an uptrend. So I would prioritize the uptrend's trigger. Okay. But really that happens. I want you to notice though, before it goes in balance, this is very key because you're going to see it again. It breaks range, starts printing kind of at the top, breaks, and then runs. You see that pattern again here, right here, before it goes parabolic. The same exact pattern, because as you get into our rotational zone, just like here, rotation, you get a break, test of the middle, starts printing market orders up here, breaks, and then goes parabolic. You will see that time and time and time again in the market, especially when you're marking up zones. That's why they're so powerful, because you can kind of get a heads up. You can only do one of three things. You can either go retest your high, retest your low, or test and pause kind of in the middle where fair value is. Rotation is his way of kind of pausing in the middle. So as it goes in rotation here, test the high, test the low, test the high, test the low, test the high, test the low. Nice, right? From there, test the high. You would assume it does what? It will test the low. But if it doesn't, you've got a new what? You've got a new value area. You've got a new area of rotation. It goes, tests, makes a new area high. So there's your high there. Comes off of that, pauses in the middle, breaks that high, goes in balance, goes parabolic. Right? Catalysts, all that good stuff are there, right? That's what you want to see. You're looking for something like this, break that. This is okay to actually take. So some people are like, well, you're buying at highs. Why not buy the pullback? That's the issue. You don't know where the pullback's going to stop, right? Remember, it can do two things. It could pause in the middle or pause low. It could test the middle or test the middle. So if it's up here, it could test middle here or test middle here. It just chose to not even get to the middle, start printing market orders kind of at the top of its range, and then go. It's very, very powerful. You see it again right there. Here. You see it again here. It comes high, barely gets to the half. This is like the halfway mark between these rotational levels. This part right here is the middle. Does not even come close to the, well, it kind of comes close to the middle, right? But the way I see it is at the upper half of that rotational zone. So if it breaks it, people are okay with paying higher prices in the market, has no problem with wanting to test those higher prices. And it does that. It's very, very, it's even more stark and way more vivid on the daily chart. You'll see here, this is what the rotation kind of looks like. Rotation, high, low, high, low, high, low. break here, the market tests, starts printing market orders up here. Doesn't really come down to the middle of this rotation. Now, some people will say, well, it's the moving averages. Guys, the moving averages, your invisible line doesn't make the market move. So I have all the lines on the chart to help me define what a buy trigger is, what an uptrend is. That's the only thing. I need to be able to have clear definitions for these things, right? I want to clearly not misconstrue the trend by thinking, oh, this Fibonacci, this reversal could make the market what if. I need to understand it could what if all at once, but right now you are in an uptrend, and I'm going to treat you like you're in an uptrend. I will take the triggers that are defined in the uptrend. Okay, so if you're in an uptrend, especially on the weekly chart, if you're in an uptrend now, I like to take buy triggers. So breaks above week highs are some of the best buy triggers that I've seen to work, because you're breaking weekly rotational highs. You're basically coming in on a weekly low, which is the best you can be. Well, I wouldn't say the best, probably monthly's better, but now you're getting into like elite territory, right? Yearly stuff. Whereas if you're looking to make a play for, a month, then this is probably the time frame you need to be on, is the weekly. Okay, so that's what we got for you. I really enjoyed this stuff. It's super fun. But I hope if this was helpful for you guys, you definitely hit the like button. And if you feel it in your heart to spend some time in the Fireside and you chat with us, we'll talk about charts and we'll chat by the fire all day, baby. This is your boy, MC Fire. I appreciate your time. Have a good day and goodbye.